if that features in the commitment of traders and also the seasonals. Let's talk to Ash in Brighton, near London. G'day, mate.
Hello, mate. How are you? How are you?
Top of the world, mate. Top of the world.
Of course you are. Always top of the world. Yeah.
Well, if you stand on your head, if you're in the Northern Hemisphere, we're on the top of the world, yes.
It is amazing here today. I can't see what I've got up there. Oh, there we go. Yeah, it's amazing here today. We've actually got some sunshine, and everybody's at the beach. Everybody's at the beach waiting for me. So I'm going to do this, and then I'm going to get down there.
Masks on, of course.
What's that? Sorry, buddy.
Masks on, of course.
No, but you know what? I mean, I'm surprised actually about the lack of adoption of the mask. As soon as people were allowed to take them off, everybody took them off. Yeah. I went to see my buddies last week on this farm in the lakes, and on the way up, it's a 5 to 6 hour journey. So you end up stopping at the service stations, and I think I was the only one, maybe another 2 or 3 people in the service station wearing a mask. Nobody had them on. So it's not really a great surprise that we're getting the numbers that we are. But as Julian was saying, you know, countries are now starting to accept that this is going to be the state.
Yep.
So it means that we start treating the economies as being 2 robbers. Yeah, maybe I was one of them. We start treating the economies.
You've seen the price of petrol, right? I think I can understand that.
Oh yeah, it's gone crazy, mate. But we can start looking at the fundamentals and just focus on that in a way, rather than worrying about what's going on with COVID at this particular stage. You know, things may change again, but we'll see what happens. I'm also going to focus on the Aussie, and I'm going to focus on gold. I think they're both really interesting markets right now. And in a way, slightly conflicting. It almost depends on which of these that you put the most weight on. Now, if I was ordering the most important data that I look at, fundamentals would come out on top. And then I start coming down to see between cotton seasonals, it's almost a close run thing, depending on how good the fundamentals are. You know, if the fundamentals were relatively flat, then I'd probably want to see much more in the way of COT data. If the fundamentals are really strong, then I'll probably be sort of okay to look at more at the seasonals rather than the COT data, as long as the COT data wasn't really negative. And what's going on with the Aussie is almost exactly that. You and I have both really liked the Australian dollar for quite some time. And the situation with COVID has really put a spanner in the works. But I think Alexis has touched on it, Julian has touched on it, that the economy over there is pretty well placed when we compare it to to some of the other majors, pretty well placed to accumulate in value. And I really like Julian's analysis on the Aussie versus the dollar price swings at the minute, and where the Aussie sits in against the dollar. Numbers from the United States, as we know, were not conducive to a taper. Now, the taper, just so everybody understands the language, is when the Fed would start to purchase less of the government debt. And that puts less liquidity, money, into the market, which means that the supply of the dollars goes down, and we would tend to see the dollar rally off that. Now, those numbers, the unemployment numbers, would suggest that situation is unlikely to happen, which would put pressure on the dollar, which may well drive it down. And then we're looking for a pair to trade it against. And this is where I like the Australian dollar, and I like I like gold. Because we'll come to gold in a moment. Let's have a look at the Australian dollar and what COT data is telling us. And it's very, very positive. 36-month is the most significant here. So the 36-month, the 3-year, 90%, anything over 80% suggests that those commercial traders are starting to accumulate at a relatively aggressive pace and looking out for the longer term. 18-month is at 100%, and the 6-month is at 100%. If we look at the seasonals, we get a slightly different view, where in September, around about the middle of September, both the weighted average and the simple average, if you like, the accumulated average over from 1988, does tend to be down. So this would suggest that around about the end of September, beginning of October would be the sweet spot to buy the Australian dollar. Now, buying in at this particular point with the fundamentals that are looking the way they are looking, you may well get chopped around. You may well, if you're buying over a longer period of time, so looking more on a weekly chart to trade rather than a 4 or a 1 hour chart, you might well be okay. So you might need to adjust your approach to buying the Australian dollar, because as I say, the Australian dollar appears to be a pretty good a good place to put our money right now. If you're looking at the shorter term timeframes, then it looks in accordance to seasonality that you might be better off waiting just a little bit longer, just maybe a week or two longer before we start to get everything lining up. COT data looks very bullish. Fundamentals are starting to look pretty good. If they are accepting that the COVID situation will just play out on its own without having to continue to lock down, Australian dollar looks good. So you might want to wait for that if you're a short-term trader. Otherwise, looking now, I think, as Julian always says, if you believe it's going 10 times higher over the course of the next year, what does it matter what price you get in at today? So that's going to be a personal preference. Now, when we look at gold, gold is very interesting as well, because with gold, the COT data is not suggesting huge buying. 35% of the commercials are looking at looking at gold in the longer term. 70% when it comes down to the year and a half. 18% when it comes down to the 6 months. So actually, 18% below 20%. Actually a little bit bearish. So the COT data is not lining up with a gold rally. However, if we look at gold on the seasonals, completely different picture. The seasonals suggest a really strong period right the way through to around about the middle of October. Now, thinking about the fundamentals of this, if we accept that one of the reasons to buy gold is a hedge against inflation, a hedge against prices going higher, and we see inflation in the United States north of 5% and no taper, no controlling the money supply, that means that the US dollar's buying power is losing pressure, is losing value. And that would certainly point towards gold being a decent hedge now against inflation. So as the story stands today, gold to me looks like a decent trading or investment opportunity. Until the picture changes, specifically with those employment numbers, I don't think the Fed are moving, and I think that given the character of Jerome Powell, he's certainly a patient guy when it comes down to the right numbers coming in. Certainly has been historically that way. He does occasionally give us a bit of a curveball, but it's not suggesting that. So just to summarize, Aussie looks good, gold looks good. Most specifically, probably, is the dollar looks a little bit flat to weak because of some of the suggestion that we had the pump. The pump really happened because taper was on the table. Now those numbers aren't really supportive of that. We might start to see the dollar ease back a bit. And in my opinion, Australian dollar and gold look like a pretty decent place to trade that against.
Awesome, buddy. Thank you for that. We'll catch up tomorrow, right? In Trading Buddies.
We certainly will, mate.
At what time?
5 to 8.
Don't be late, right?
Exactly.
Thanks, mate. Really appreciate it. Sounds like